Good morning. We will pay attention to the outflow of money as a result of interest that was capitalized and the outflow of money when we pay our loan back, so on the installment that's paid on the loan. If we look at this information, we received a loan statement from the bank, and according to this statement, we owe 50,000 at the end of the year. At the beginning of the year, we owed 60,000, and during the year we made a payment of 17,200. So if we record this in the general ledger, we will open account for Loan Finbank. Then this 60,000 opening balance we will record in the loan account on the credit side because loan is a liability. The closing balance is 50,000, so we will record that on the debit side above the total to bring down the balance of a liability on the credit side. The total amount that we paid on this loan, so our total installment was 17,200. Included in that 17,200 is the interest that was capitalized. So if I add up the debit side and I subtract the credit 60,000 from the 67,200 on the debit side, I see that the interest for this year was 7,200. Interest will be recorded in the income statement. So the amount that we will show in the income statement will be the 7,200. If we go and we record the entries in the cash flow statement, we will show that cash flow from operating activities where we pay interest, we have to show that we paid the 7,200, so there was an outflow of 7,200 for interest. And then we also made a repayment on the loan, so there was a 10,000 Rand outflow for the installment that was paid on the loan. Now, if we look at this 17,200 there, we only record one figure in our loan account when the amount is paid. But when we do it in the cash flow, we have to split that 17,200 between the amount that went out as a result of interest and the amount that went out to reduce the loan. So what did we learn today? When interest is capitalized, the interest is added to the loan, and at the end of the year, you will go and debit your interest on loan account, and the loan account will be credited with the interest. Although this total installment was debited in the loan account, when you do it on the cash flow statement, you have to make that split to show that some of this money was for operating activity to pay out interest. Some of the money was for a financing activity to pay the loan. The interest portion will be recorded under the operating activities. The installment portion will be recorded under the financing activities.